It's an acronym that stands for Evolving Intelligent Insurance, right? And the idea behind intelligent insurance is to use telematics information, so the sort of information that is generated within the computer on a vehicle, whether that be a truck or a passenger car vehicle, that kind of thing. There's a little device that plugs into what's called your OBD dongle port. OBD stands for onboard diagnostic, right? So all the auto manufacturers have incorporated this port on cars since 1996. And it's a way for service technicians also to get information on the car, right? So this unit that you plug into that port has a mini cell phone on it, right? So not only is it reading information from the car about what the car is doing, where it is, and so on, but it's also transmitting that back to a central place where it gets interpreted into actionable information that an insurance carrier can use to underwrite insurance, right? So, knowing what the predictive factors are through predictive analysis, I can predict the probability of a driver getting into an accident in the future, right? And therefore, pay out in terms of claims. But it doesn't really stop with the telematics data, because that just gives you a view of what's happening within the car and with the driver, right? There's also the geospatial aspect of this, right? What's happening around the car at the time. So not only do I get a picture of what's in the car, what's around the car, but I use those factors to actually predict what the future will hold, like accidents or things like that. So this helps insurance companies accurately price risk more so than ever before. And the bottom line is, it offers an opportunity to reduce overall risk because of the feedback nature of telematics, right? Before, with your credit score, there was really nothing you could do about that. I mean, when you walked in an agent's office, your credit score was what it was, right? And it's not like you could change overnight to impact what you would pay for insurance. But with telematics, now I have a mechanism by which I get feedback on a day-to-day basis on how I'm performing as a driver, right? And I have the conscious choice, if I choose to do so, to alter my behavior, and a direct link to that is the price I pay for insurance, right? So now you've got a mechanism that puts power in the consumer's hands to determine their destiny when it comes to insurance and the insurance experience. And that's a very powerful thing, we think. And even though there's some initial inhibition from the privacy perspective, we're starting to see the uptake on that quite a bit. If you're willing to give us this information, we're willing to give you a discount on your insurance, right? Because we can now more accurately price your risk as a function of insurance, and therefore, I can price it lower than anybody else in the market, that kind of thing. And I can give you feedback that says, hey, great job this month. If you would only stop hard braking 10 times per month, I can knock an additional $5 off your annual premium, right? So setting goals for yourself. So the good drivers pay more than they should because they have to offset the costs of the not so good drivers who should be paying more, right? And in the new world, the new way of looking at things, more and more people are asking the question, why should I subsidize somebody else's risk? I should be responsible for mine, and I'm willing to pay for mine, but not somebody else's, right? So that's the thought process that's really bringing light to the new technology here and the new methodology that will eventually benefit many people, right? As long as you're willing to change your driving behavior, you can save money, right? And then think of what that does from society's perspective as well, right? Safer roads, less accidents, less deaths.